going through the traditional process is extremely challenging. The amount of documents and process to create a fund is extremely laborious.
A lot of the world thinks that crypto is just a scam. We're not going to achieve all the great things that Carl was talking about earlier.
Fugazi, tech debt, social layer, divide, DAO structures.
Are they spearheading these conversations and it just kind of came to this naturally, or do you think there's...
Welcome back to the Rollup.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
What's going on, guys? Welcome to episode number 2 of Stabled Up. We have Carl from Man Ventures. We've got Bhau from Paxos. They actually used to work together, so it should be some good vibes and team chemistry here today. Rob, good to see you in Korea. Carl, welcome to the show for the first time. We've had your partner Mike on once or twice, but good to have you. Bhau, good to see you again. Guys, this is Stabled Up, presented by Frax, one of the leading stablecoins in the space since 2020, 2019. DeFi champions pushing hard into the regulatory environment with their Genius Act compliant stablecoins and their yield-bearing stablecoin. We got a lot to talk about today, guys. So, Carl, why don't you open us up? Quick intro about yourself, Man. Bhau, it's good to have you back, and then we will get right into it.
Terrific. I've been a general partner at Man for 3 years. My background's in product and engineering. That's really where I tend to spend a lot of time when I work with companies. Man Ventures at a high level is an early stage venture fund where we invest in crypto native founders at the earliest stages, pre-seed through Series A.
Beautiful. Thank you. Carl, welcome to the show. Bhau, it's your first time back.
I think it's Bo. Sorry, Rob. I think I keep saying Bhau. I think it's Bo.
Yeah, you did. I thought it was Bo, and then you said, okay. We'll throw that one out.
It's a tricky one.
I think it's because he's
Rob,
in Asia.
You're forgiven.
He's in Asia, so he's thinking Bhaus all the time. You know what I mean? I think that's what's going on right now.
He's got the Korean barbecue on his mind.
I was going to forgive you because you're in Korea right now. And it's probably middle of the night.
There's not much sleep in Korea. Bo, welcome back. First time since the USDH saga. Vote went one way or the other, but I'm curious how you've been since the vote. Give us some takeaways and just some reflections on really the process and how things have been the last few weeks.
Totally. Well, first of all, it took a few days to recover after that. That was a week of no sleep for sure, but it was a lot of fun. And so coming out of it, I think the reaction from the community, regardless of how the vote went, we had so much outreach in the days following the vote from all the teams we talked to, and they're like, hey, we still really want to work with you guys, which has been an awesome reaction, right? And I think we really achieved what we wanted out of that kind of whole proposal. Would have been great to win, don't get me wrong, but it was like an accelerated 1 week timeline just to get to know so many different community members and teams building in Hyperliquid, some that we were already connected with, some that we connected with for the first time. And so just all coming out of that is the warm reception from the Hyperliquid community, even though we didn't win, and saying, hey, please come still build with us. We still want to do things. And so we have some team members in Korea this week, and we're kind of continuing on our plans to kind of decide on the right set of partners to start building with in Hyperliquid. And so, we're still continuing on, we're still excited to keep building in the space. And so, appreciate the warm welcome from the Hyperliquid community, regardless of the outcome of the vote. And we're excited to keep going.
I saw Native Markets just deployed USDH today onto Hyperliquid. So congrats to them. And the competition has just started. So it was great to see all the different providers come out and express their support. Just to have Arthur Hayes dump on us after calling it for 128x. What's new with that guy? Well, I mean, that's just like clockwork. All right, boys, let's not bury the lead. Tether at $500 billion valuation seeking 20 bill. Bullish or bearish? Carl, go.
I think it's bullish. I think at the end of the day, people have thought about money as a legacy financial system and thought about valuation metrics on that framework. But really, these are technology companies. The hard part of these businesses is not the reserve management. There's actually, with the Genius Act, increasingly clear guidelines on how to manage that capital. It's about technology and distribution. And so with that, I think they're extremely well positioned to continue to eat market share. I mean, the valuation's high, but at the end of the day, I think they are the leading stablecoin out there in terms of adoption and growth. And I think with the addition of Bo Hines to their team, it's just continuing to deepen that regulatory situation. I think the last thing I'd be thinking about is not just technology, but also AI. I think it's still wide open as to, are AI agents going to pay on chain? Which chain are they going to pay on, and which stablecoin are they going to use? And I think that's a key area where whoever wins that space is going to grow massively. So I think it's obviously very expensive. We don't participate in rounds like that, but I understand why people are so excited about Tether.
I think that's a really interesting point about AI, because that's not something that was intuitive when this announcement came out. That is a conversation topic here in Korea. 𝗵 was on stage today. He was talking about how we've essentially had the formation of stablecoin dominated economic zones. And so we have an on-chain stablecoin, and it's primarily Circle with USDC. And then we have off-chain and centralized exchange stablecoins, which are primarily USDT denominated markets with Binance and with originally it was Bitfinex. But now you have those perps that are denominating those asset classes. And so if you have AI agents on chain, they're primarily going to be consolidated into a single stable coin, because that's where liquidity goes. So I'm curious, actually, from the first point that you made, Carl, because I want to pass this to Bo and get his perspective on it. We had Wyatt on just a few minutes ago. He was talking about how, look, Mike Dudas, Carl, your partner, put out a tweet, said this is, effectively 2x Goldman Sachs at this valuation. Meanwhile, Goldman Sachs has $3+ trillion in assets under management. Tether's got something like 167 billion. Maybe it's a little bit more than that, but it's not 3 trillion. So, Bo, you make, Carl, you made the point about this being a technology company. Bo, do you think that's the right way to think about, stablecoin issuers? You being a stablecoin issuer with Paxos, is it a technology company? Is it a finance company? It's somewhere in the middle. But generally, when you're thinking about the growth pattern, how do you think, and the valuation heuristic here, how do you think is the right way to think about these issuing companies?
Yeah. I mean, I absolutely think these types of companies are technology companies, right? And I think the point that's really interesting to me is like, yes, like it's 2x the valuation of Goldman Sachs. How many employees does Goldman Sachs have versus how many employees does Tether have? Like the operational leverage that Tether has gone from both technology and network effects that they built up is incredible. And I think it's just a reminder of the operational leverage and scale that kind of crypto, or like call it technology-enabled financial companies, can get to. And I think it's incredibly bullish, right? And I think this has always been like kind of the hypothesis of everything we've done with like Paxos and Paxos Labs, of like, hey, like we think this is gonna be a massive industry, but also the idea of bringing code and automation and technology to money is, I think, such a massive opportunity that I think some people in crypto understand it, but I don't think the world at large has really internalized that. And I saw some of the headlines yesterday. I was like, at this valuation, Tether would be the largest privately valued company next to OpenAI, and everyone gets the potential of OpenAI, but I don't think until that number people really understood the scale and the kind of leverage people can get with applying technology to money as a sector.
Yeah, I mean, I think there's people on the street who haven't even heard of Tether. Like legitimately, people that are working in traditional banking or investment banking that have not heard of Tether. This is going to be on their desk as of last night, this morning, a shock. I think the one thing that people are thinking about is, well, if they're going to raise this much money, 20 bill at a $500 billion valuation, the question is, are they worried about the interest rate trend being, going down, that being a large part of their business model, interest income? And then how do they think about actually creating new business lines with this raised capital or with their current stack? They own farms in Latin America. They own equity in Bitcoin mining companies. They own Bitcoin gold. How do you guys think about Tether expanding their business lines to basically protect against the decline in revenue from dropping interest rates? I'd like to hear from you both on this. Maybe Bo, you can start off.
Yeah, I mean, look, I can't speak as much to their ambitions on farming in Argentina. I'm not an expert there. Seems interesting, seems cool. The thing I've always thought about with, kind of like these early movers on stablecoins, particularly Tether, right? Because Tether keeps almost all of the yield that's generated by USDT, people are like effectively paying to use Tether, and they're trading kind of the amazing network effects and liquidity and availability and on and off ramps of Tether in exchange for saying, I'll forego my yield. my thinking is, and like my hypothesis has been like eventually in the long term, the economics or margins of stablecoin issuers look a lot more like asset management businesses, right? Where you're looking at 20, 30, 40, 50 bips on assets under management. And then, you're like monetizing around that. The question that, I've been asking myself is, well, are Tether's network effects so strong that they're going to be able to fight that fee compression for longer than other companies, right? But tied to that kind of AI point, if you do have an AI agent that's transacting with stablecoins, they're going to programmatically find the best deal and find the best economics, right? And if there's another stablecoin that enables them to achieve their stated goal or outcome, but it actually has better economics on it for them, AI is more likely to dynamically switch that than a human, right? Human consumer behavior is much harder to change and often not like rational, versus with an AI agent that's doing this, you can literally program it to say, I want to achieve this outcome with the best economics possible. And it will go scan and actually like go iterate through that. And I think that actually might drive some of this fee compression for issuers. But I think issuers need to be playing for the long game. And I believe that eventually like margins compress to like an asset management business model versus like you keep everything.
Yep. Carl, would love to get your take on this. And I just want to throw in there, this is probably very path dependent. Once those liquidity network effects become entrenched, I think you're totally right about the programmatic effect of AI and the adaptability and the ability to switch and pivot. But ultimately, once these things take hold, these liquidity network effects they tend to compound. Carl, how are you thinking about this?
Yeah, I imagine that. I mean, I guess in thinking about the question, it's like, where don't they expand? Like money is used in every part of our lives, everything from, e-commerce, physical retail, checkout, global financing, prime brokerage. So I think there's essentially unlimited upside that Tether can achieve. I think the most interesting business model here is democratizing financial services that previously were not available to like 99% of the population. If you look at how today people are saving and spending in Tether in emerging markets, you imagine new financing products that can go with that to now enable the thing like getting loans that we can do today in the United States that's not available for most of the world. So basically all the financial services we get today, democratizing them and being the conduit and trusted brand name that people utilize. The last part on the business model that's really interesting is on the blockchain side. So we're investors in Plasma. And what I see is the beauty about having a blockchain or partnering with a blockchain is now you don't just get money based on the interest, you get money based on gas fees for every single transaction. It's like, imagine if you're able to be Tether and build out an ecosystem through Plasma or any other network that they choose to partner with. And from that, be able to get a portion of every single transaction that takes place on chain. That's where this becomes a revenue monster, as especially considering that interest rates are going to come down over time.
Andy, you're on mute there.
Sorry, guys. Just to double click on the Plasma point. Today is Wednesday, the 24th. Tomorrow is Plasma's mainnet. This is live today. Will be released as a full episode tomorrow. Plasma mainnet. What does this mean for Tether? Obviously, coming out as the category leader in the stablecoin chain wars. I think one could say very highly competitive market. You've got Stripe's Tempo, you've got Circle's Arc, you've got Plasma and Stable on the Tether side. What does Plasma's mainnet mean for Tether's valuation, for Tether's entrenching its USDT asset across the world globally? And, let's just start there. And then I'm curious to get your take on their Plasma One announcement as well.
Yeah. So I look at it as it now gives people a safe and secure place to transfer Tether with an elevated user experience compared to what you can get today on any other blockchain network. That's because it's designed with stablecoins in mind. And so in terms of becoming and this relates to Plasma One, basically the consumer bank for the world is the way I think about it. Unlike banks today that are bound by regulatory restrictions and different geographies and other considerations, stablecoins are global by nature. And so there's no bounds to how quickly these stablecoin issuers and networks more broadly can touch, and they can scale at exponential rates faster than I need to, in order to enter a new country, I need to get a bunch of licenses, et cetera. Stablecoins are ubiquitous and universal. So I think there's just unlimited growth rate here. Plasma is very well positioned and already partnering with Tether to be one of the places where the world comes to save and spend and do more.
Yeah, just disclosure, our fund invested in Plasma as well. Met Paul quite a while ago and have been super close to them. It's trading pre-markets right now at about $8 to $9 billion fully diluted valuation, which is a big win, I'm sure, for Six Man as well as for our fund, which we're rolling out the branding for and whatnot very, very soon. It's Good Idea Ventures. It is a prop capital fund, probably around 7 figs invested principal, maybe just over $1 million. We've had some big winners so far. We got a long way to go. Robbie and I are starting our career the last 2 years. Bo, just quick from you, take on Plasma, take on the stable chain or stablecoin chain kind of wars, what this means for Tether.
Yeah, so I think the most interesting thing is Plasma One. And the reason is the thing that I believe since I got into the space, and really like the reason why I joined Paxos in the first place was I've always believed that the broad adoption of crypto, stablecoins, blockchain rails is going to come through existing kind of like fintech interfaces, right? And the reason I believe this was I worked at Cash App and Square before I came to Paxos. And one of the things I saw was it is so hard to actually like do customer acquisition in a consumer fintech setting. And what we were doing at Cash App was we were actually going around the world and investing or acquiring kind of like the P2P apps in different regions. And what we were finding was if you were a second mover, like Cash App was actually kind of like an anomaly, that it was a second mover in the market that was actually able to catch enough market share. And we found that's very hard to do. And so taking that experience beyond, what I've been thinking about is like, well, I think the Plasma approach is very interesting. I think Plasma One looks like an awesome app. I would love to use it. The question becomes like, do they end up developing kind of the muscle to go run like consumer fintech like customer acquisition, right? I think it's a very different muscle, a very different motion than crypto user acquisition, right? And so the question I have in my mind is it the Plasma Ones of the world, which are these kind of built from the ground up like stablecoin or blockchain aligned fintech apps? Or is it the Cash Apps of the world, the Gcashes, the Paytms of the world that actually get around to implementing these services, and they already have the distribution, right? And we know like Ant and Alibaba are looking at this, like so. That's kind of the race that I'm seeing, and I'm curious to see how it plays out. I love the idea of an app that's built from the ground up, like around stablecoin rails. But again, like maybe I'm like scarred from my past experience. Getting distribution in consumer fintech is very hard. And so like my bet is slightly towards the like existing fintechs getting together to like actually do some of this stuff. And for what it's worth, that's kind of like what we're focused on at Paxos Labs is like, we think, yes, stablecoin access for existing kind of like fintech platforms is important, but there's also kind of things that come beyond that, right? And this is kind of what Carl was getting at. It's like, well, you just do stablecoins and then maybe you do payments, but then there's all these things around lending, borrowing, all the financial services that can be built around stablecoins. And I think that's gonna, like every fintech app in the world is gonna get there. It's just a matter of when, is how I think about it.
Carl, anything to add there?
No, I think he's spot on. The only thing I'd add is I think Tether has distribution. I don't know Cash App numbers versus Tether, but I'd assume that more people know and have heard of and use Tether globally than Cash App. So I think when you start to pair the distribution that they've already achieved with the technology, blockchain, and to your point, like the financing layer that can be added on top, it's a pretty powerful combination. The last thing I'd add is, banks today, when they're valued, they don't really have ecosystems, or at least not robust ecosystems. But blockchains, by definition, to Bo's point, are challenging to build. But if you can build them, you reap enormous rewards. And so you're taking the benefits of banks and money ownership and movement with the ability to build an ecosystem where now anybody can also build value add services and platforms on top. I think it's a pretty exciting combination.
Introducing Extended exclusively on Starknet, a next-gen perps trading platform live today. With 50 plus trading pairs from crypto to TradFi, you get the best experience on chain today. Deposit in the community vault for attractive returns, EMV compatible, and engage in unified margin, spot trading, lending, and perps trading. All right, gents, rolling into the next topic, we've got stablecoins to be used as collateral in the US derivatives markets. So it's kind of a vague headline here, but curious for your initial reactions. What does this mean for stablecoin adoption? Maybe what does this even mean? Like, what is the current collateral in U.S. derivatives markets? How do these things settle? And what does the addition of stablecoins eventually mean? Maybe we can start with just understanding how U.S. derivatives markets work first. If either of you guys would like to take a quick stab at that.
I don't have a
Because
background in
I'm-
traditional finance. Here's what I would
Okay.
hypothesize, or unless Bo, you want to start if you have a back. Okay,
Go for it. I'm
go.
happy
What
to share thoughts
my
after.
hypothesis is anyone that's lived through. Actually, when I joined Paxos, the reason is I listened to Chad on a podcast, and he talked about the 2008 financial crisis, and at the time, nobody knew where their assets were. And I actually lived this through the SVB collapse, where I manage all of our assets and we had wires in different places, and I'm moving wires and literally don't know where the money is. And I think stablecoins have a very, it's very clearly understood who had what money and when. And with that, that's where this starts to become powerful, is when you have these markets, and if there is any sort of collapse or extreme volatility, and people are losing their financial positions, we now have the ability to trace the money, and I can understand, did this confirmation and transaction go through or not? And just that peace of mind and speed of settlement can actually help limit the downside in these financial catastrophic scenarios. So I think that's where it can be powerful. I think in the early days, it's going to take time to get adoption. People are used to wires, but it's more seamless to use. When we fund companies, we need to do callback numbers for wires, and it's such a pain. Versus, I think this is going to simplify back office operations for all these companies that use, futures, and now they can use stablecoins and have lower operational requirements, and it can actually help speed up settlement. So I'm pretty optimistic, but I don't expect huge outcome immediately. I also don't know this market well. And so as a typical VC, I can opine on anything without having as deep of depth here. But I'm always quick to say when I don't have depth in an area versus when I do.
I'll say a few things with the same disclaimer. This is not my area of expertise or area of depth, but I think on the surface, the potential benefits are clear, right? Faster settlement times, lower transaction cost, 24/7, to Carl's point, transparency. I think all that's really interesting. I think there's another piece that's really interesting around all the actions that are actually taken, right? Kind of margin calls, like doing all the kind of actions that need to happen when you're running an exchange or like a trading operation. The ability to automate that with a modern tech stack, right? I think that is like really exciting to me because again, like that's the thing I always come back to with stablecoins. It's like modern tech stack on money. That is amazing. Like a lot of the banking system is built on a very like legacy tech stack, and it's all built in silos. So we're talking about a transparent, interconnected tech stack that enables money to move. Now, with that said, one of the things I've been kind of like noodling on over the last 24 hours is like, the idea of stablecoin accepted as collateral for futures trading sounds amazing. And what I was playing out was like, let's say like tomorrow they like go through this comment period and they're like, amazing, this is great, we're gonna do it. What does that actually mean to go do it, right? There's a whole laundry list of things, and I'm sure Carl can like help me out here. But it's like, okay, well, some of these venues need institutional grade wallets to manage these, like where are they actually holding these stablecoins, right? They need wallets. They actually need the ability to like call smart contracts. They need to be able to reconcile stablecoin balances versus fiat balances, do the reporting that's required by the CFTC of them. So there's like this whole implementation path that I can see like being like years of work. I don't know, maybe a year of work at least. And so I think that like the headline's very exciting, but when I like stop to think about it, it's like, oh man, like actually like all of the venues that participate in this market would need to like level up their infrastructure to actually support this and all of their operations.
Yeah, we haven't really had a new financial system since we became digitized. Even the fintech area was putting lipstick, was putting lipstick on a pig. This is the first time, to Bo's point, we're able to rebuild from the ground up this financial layer on blockchain rails. And with that comes a lot of automation, a lot of transparency, and it's very exciting.
I think the 24/7 nature, Rob, as well, and I know you guys something, is where that the entire traditional financial sector is heading towards. Feels like this is like a little hint as to like, hey guys, like we're starting to think about how do we get this thing to be working all the time.
I'm curious, who do you guys think this push is coming from? Like obviously us in this room, like we've probably been thinking, oh, the traditional financial system has been legacy for too long. We want to change that. But who do you think is, at the CFTC, are they spearheading these conversations and it just kind of came to this naturally? Or do you think there's there's entities out there that are sort of, they had this in mind and they're pushing for it?
So my take is that we've shifted into an administration that where being pro-innovation is rewarded and applauded. And so I think even SEC Chair Watkins kind of did a speech in a couple weeks ago in Paris, and he spent a lot of time talking about kind of like this being crypto's moment and all the things that the SEC wants to do to ensure we're creating kind of a pro-innovation environment. And I think like a similar kind of like sentiment coming out of the CFTC. And so I think we've shifted towards like an environment where administrations are rewarding people for being pro-innovation versus kind of like pro-enforcement. And it creates like a whole different set of like incentives, but also like I think there are a lot of people at these agencies that are pro-innovation, but weren't really being given the space to kind of push some of these new ideas in previous years. And so I think we're in a dramatically different place from like a political environment perspective as far as like crypto goes. And so I think a lot of people are pushing forward ideas that maybe were on the shelf for a few years or just now feel comfortable doing.
There's another innovation here, like a regulatory innovation, which is the potential exploration of combining the CFTC and the SEC under Atkins. And Carl, I think you mentioned earlier in this segment that there's really no need for a lot of the protections that were put in place under the legacy system if we are to upgrade. So how do you think about making this regulatory shift? Is this continuing in a positive note to make this merger between these two agencies?
I don't have a strong point of view. I think it's interesting that we do have this question of going back to orange groves in 1929, is this a security or a commodity? It seems like an outdated set of infrastructure and rubrics that we're using. So like generally it seems like a positive development, streamlining the regulatory process, creating clarity. Where right now there's limited clarity. I'm sure if they were combined, the market structure bill would be easier to push through than it is today. So it generally seems positive, but I'm sure there's some unintended consequences that may arise.
Yeah. I mean, I think from the lens of having Gary Gensler in his administration be the cause of so much fugazi, tech debt, social layer divide, DAO structures, lack of efficiency in the industry, it really feels like slowly but surely between the new administration and as well as the newer set of entrepreneurs coming into the space, better talent, we're just kind of slowly unbundling a lot of these. It feels like it's just like a bunch of rubber bands that we're just taking off one by one until we get back to like the core, which I think is just building really, really better technology, helping the financial system go into this new era of internet-based finance, 24/7, verifiability, all the properties that we enjoy about crypto and blockchain that we're now used to, bringing that digital asset infrastructure to the real world. And frankly, I think maybe we can blame the social layer a bit inside of the way that we thought about it. But frankly, I think that we were kind of forced to think about adoption in a way that was coming from a feeling of needing to be protected and not wanting to take legal liability. And so I think it's a really positive development to see as Bo mentioned, just this shift towards innovation and broadly seeing the industry untangle itself slowly but surely here.
But Bo, do you think Gensler was just that bad, or do you think this administration is just that good?
I don't know if I'd make like a definitive statement there. I would just say it's different, right? I would say it's different, and I think like the current scenario or current situation is definitely much more pro-innovation. One thing I will say though is I think no regulation isn't the answer either, but I also think there's like a little bit of a burden on us as an industry to better like self-regulate to a certain extent and hold ourselves to a higher standard, because that is also a limiter to growth. If a lot of the world thinks that crypto is just a scam, we're not going to achieve all the things that great things that Carl was talking about earlier about how the whole world has access to these financial products.
Guys, kind of coming to a wrap here in the next 5-10 minutes. When we're thinking about this, broad stablecoin landscape, right now we're operating within, around let's call it like 200 billion or so, maybe 300 billion. Sorry, I think it's probably a closer estimate. It's probably around 270 total right now. I think it's pretty clear that we're on a road to $1 trillion of stablecoin supply here, if not multiple trillions. I'm curious what you guys believe that path looks like from the regulatory perspective, from integrations into traditional finance perspective. Like, is there going to be something that is a big, a big potential win or milestone that we hit that just unlocks so much more stablecoin supply? Or, in a similar way that we saw DeFi infrastructure like Aave and Morpho and Compound and Uniswap and these names kind of now become much bigger as a result of these treasury companies, and these treasury companies start to bring in capital on chain, institutions is it just the same driving forces that are going to drive DeFi to, $1 trillion of total TVL? Is that same force going to be driving stable coins to trillions in supply? Or what do you guys believe the driving forces of that increase in total supply will be over the next year or two? And maybe Carl, you can start us off.
That's a 50-page doc that I could write on. So I'll try to give you the 30 seconds to 1 minute version.
Beautiful.
I think the obvious things are the emergence or the continued growth of consumer banking globally, where using stablecoin native banking. I think that's just an obvious one that's going to continue to grow. It's also going to help increase crypto mindshare more broadly. And one of the things I found is once money goes onto the blockchain, it very rarely goes off. And so once the world's citizens start to put their money into Tether and into other stable coins and products, it's very unlikely to leave, right? So I think that's going to be a huge growth lever that's going to have compounding returns. And I think like banks in general can really increase by tens or hundreds of billions of dollars almost overnight some of these settlement flows if they actually start to adopt stablecoin rails. I think they're going to be slower than people think, even in this optimistic regulatory environment. But I think that is a major growth lever. The one that's probably the biggest dark horse that I feel like people don't talk about enough is private credit. We've seen a lot of teams and now even funds forming around private credit on chain. And if you're trying to raise capital, it could be anything from, any sort of debt instrument that you need. Going through the traditional process is extremely challenging. Even in the terms of like fund formation on the venture side, the amount of documents and process to like create a fund is extremely laborious, and you have to hire outside firms to help you manage that process. But being able to put these things transparently on chain is actually a radical growth lever, especially for mid and smaller sized companies that need access to debt but are locked out of the current financial system today. Almost every day of every single week now, I'm getting an opportunity to put private credit on chain or some technology platform that's streamlining this whole process. And to me, that is an incredibly exciting area that's actually going to help business and capitalism more broadly. And nobody's talking about private credit. So I've been spending a lot of time there. There's some really terrific builders in the space. Along that is like the whole vaulting process of things like Upshift and Midas and others, where they're basically allowing capital formation on chain for funds, for businesses to grow. So that's one that's going to grow very quickly.
I agree with Carl on all of those. One of the things I was thinking about on this topic was, we've talked about there's, whatever, $200 billion of stablecoin market cap today. I was recently reading about kind of like some of these very large brokerages just in the US, like kind of like the Charles Schwabs of the world, who alone hold, tens, if not hundreds of billions of dollars of cash on platform. And so one of the things is like, well, what would it take to get those types of customers to like flip everything to stablecoins? Because that is like overnight, just like eclipses the entire stablecoin market cap today. And there's obviously regulatory things. There's also kind of a mundane topic that most people don't know about, but it's like how accounting is done around what's considered cash and cash equivalents. Like what can these regulated companies or these public companies actually hold either on behalf of customers or on their own balance sheet? And getting stable coins to be treated as cash and cash equivalents, I think is a huge unlock to getting like massive amounts of inflows into stable coins. And so that's what I'm like. I think like obviously the global banking and all that stuff I think is gonna be really interesting. And it's like what I'm personally most interested in. But really when you're looking at like what are gonna be like the big number swings, it's going to be like some of these massive brokerages coming in and say like, hey, I'm turning all my cash on platform into stablecoins, right? And like, that's like one stroke, obviously it doesn't happen overnight, but theoretically a single platform could add $100 billion of crypto market cap if they decided to take that step. And so that's really exciting to me. And I think that's going to like get us to $1 trillion faster.
Some could say trillions. Carl, trillions. Plasma mainnet tomorrow, baby. We've been waiting for this for a while.
Let's go.
Let's go, guys. It's been a pleasure. Thank you for your time. It's over. It's past midnight now in Korea. It's officially Thursday, as you'll see on the feed when it goes live. It says Thursday I think it's a good time to wrap. We're going to let Rob sleep. Bo, Carl, thank you for your time. It's been a great session.
Thanks for having me.
Thanks for having us on, guys.
Thanks for coming, guys.
Yeah.
See you next
Cheers,
time.
boys.